And a very good morning, folks. Welcome to Almus Market Mornings, where we try to bring the updates which are influencing the financial markets on regular basis. This is Shikhar Garg, and with me I have our beloved Mr. Jayaram Krishnamurthy. Before we begin, JK, I would just like to post one small question which you can answer during or after your update. We heard that RBI announced a sell-buy swap yesterday, and we would like to hear a bit more from you on that. So over to you, JK.
Thank you, Shikhar. Yeah, definitely. There is my coverage on that implication of swap announced by RBI. So to start with, Ukraine continues to grab maximum attention from markets, and we have been seeing alternate bouts of positive and negative news on Monday when US was closed. Latest, of course, has been that US is imposing financial sanctions against rebel territories freshly recognized by Russia as independent, and warned that more were ready if necessary. Sanctions herald a new phase in what could soon become the most dangerous East-West confrontation since the collapse of the Soviet Union. It is expected that should there be more moves in this direction by Russia, Europe and US will have a package of what they say will be crippling the economic sanctions on Russia. US futures have been trading in the red. Asian markets have kicked off in negative territory. Escalations have lifted the safe havens further, pushing 2-year yield to 1.43 and 10-year to 1.86, while gold has rallied to the key 1910 resistance area. Yen has slipped to 114.58. Dollar has been struggling against other major currencies as tensions seem to be building up by the day. As of now, diplomatic efforts are yielding no results, so dollar seems to be in demand. Ruble has weakened as much as 6.5% from yesterday's best levels, as threat of sanctions weigh on the economy. Economic news from most regions, mainly the manufacturing and services PMIs, have come strong, reflecting a robust post-Omicron rebound, but little attention is paid by the market in the current situation where it is overwhelmed by geopolitical developments. Rupee has been trading, rather reacting more to positive news from geopolitics than falls on any negative news. That clearly shows a bias for lower USD INR. However, strong support at 74.40 is holding, and although the market maintains a sell-on rally bias, the situation is quite fluid, and any further escalation and oil pushing towards 100 would be very risky for the USD INR shorts. Now a bit on the swap announced by RBI yesterday. Post-market hours, RBI announced an auction of USD-INR sell-buy swap, where bids are invited from banks to receive premium up to 2 years, notional being 5 billion USD. Though the stated objective of this is to elongate the maturity profile of forward book and smoothen receivables relating to forward assets, the unstated effect would be to neutralize the spot and money market impact of large inflows expected from LIC IPO. It appears that the central bank would be absorbing a large inflows expected to avoid rupee appreciating, and at the same time, the rupee funds released due to their buying will be offset by the sell-buy swap. At the same time, their sell in near-term leg of the swap will result in cancelling some of their buy positions, which has a historical average of around rupees 58 per dollar. This, combined with the maturities of earlier buy-sell swap done by them in earlier years, will result in a healthy profit in their books, which boosts the dividend payable to the government. In other words, the operation announced will achieve multiple objectives of the central bank. Of course, we do not see an immediate impact on the spot rate, which is purely guided by the geopolitical developments. Thank you. Have a nice day.
All right. It seems central bank is one of the good performers of the financial markets. That was great, JK. Thanks a lot. It is always good listening to you. Now, before we close, I just have a small update for you. With so many changes happening around the world, we look to delve deeper into some of the topics on weekly basis. Now, this week, we are bringing in LIBOR transition, which made the rounds quite a few in the past. Now, this is something which is more certain when we compare it with the geopolitics going on. So hopefully we bring in something good value for you guys. Till then, we bid goodbye. Thank you so much for your sound listening. That's it.